Back to the charts with Big Boss Crypto, giving you another trading analysis. This time we're gonna take a look at what to expect from the year of 2023. And I'm gonna give you everything you need to know, how to time it, and when we will see a bottom. And I'm gonna warn you right away, 2023 will be the most important year probably in most of you guys' investing career. And I'm gonna explain to you why. Because 2023 is gonna be a crazy year and a year of a great opportunity in my opinion. Let's look at the charts. So let's first look at the volume candles and where they reside on the weekly time frame. To the upside, we have the closest candle which hasn't been filled at 18.2k to 20.5k, and we have some at 26, 32 and 55k. To the downside, however, we do have a couple of them on the weekly time frame. We have them at approximately 14.5k, 12.5k, 6k and 3k. So those are the volume counts which hasn't been filled. And for those of you who don't understand the volume counts or are new to this concept, it's basically where the market maker shown his presence and moved price aggressively. And to do that, he needs to leave orders in this zone which hasn't been filled. So a lot of sell orders came in here, for example. Bam, rip price to downside. Not all of them got filled, because if there's more sellers than buyers, then price moves down. And when we see volume candles like this, it means that a lot of orders are in this zone and hasn't been filled. That's why price is still below it. So basically that's the concept of the volume candles. So let's look at the year of 2022, which started around here, and we've been going almost straight down, moving to 16.8k, which we are at right now. And to get the bottom targets and basically the idea of how Hbar we move and how Bitcoin we move, you can watch yesterday's video. And in this video we're gonna cover when to time the investment of your lifetime, because 2023 will be the most important year of your investing career. And in order to understand how the market moves, this is the market maker structure. It starts out with a W bottom like this. It moves aggressively from this zone quickly to the upside and creates a W pattern and moves with the first leg up. After that, we usually see a retrace down and form a second leg up. After that, we see a retrace down or consolidation. And this is where we do form a double top formation after the third leg up of some kind. It's not perfectly an M formation. It could be like this, above or below. It depends on how the market maker filled the orders. Then it moves down the opposite direction. First leg down, first retrace, second leg down, second retrace, and then we bottom out with a W formation like this. So that's what you need to know about the market maker structure. Let's look at how the market has moved then on the weekly time frame. I'm not going to go through all of the steps. We can see that we have the double top formation here. So we moved aggressively from this zone to the downside, formed this M formation, dropped below it, formed our first leg down. Now we consolidate to the upside a bit and went through this zone here with our second leg down. Right now we are consolidating, and I think we have another leg down. Sorry to break it down to you guys, but we have another leg down. How far and deep it's gonna be, well, that depends. And when we get there, we will form a W bottom of some kind, and then we'll be out here forming the first legs up and going to a parabolic bull run, which I expect to be happening at the end of next year. But we have our targets to downside. Watch yesterday's video. And now I'm going to give you the information that you need to know about the Federal Reserve. As you know, the Federal Reserve, they have raised the interest rates for the last year. And it doesn't seem like we are stopping until next year, basically. And we can see that they have stated that they are currently looking at raising the interest rates to approximately 5.25 to 5.5%. We are currently at the 4%, 4.25% level, and that usually indicates that we have some more to go. So looking at previous Fed pivots, and Fed pivots basically means when they lower the interest rates and print money. Now they're doing the opposite. They are increasing their interest rates and removing money from the system. And we can see here, historically, going back to the 1970s, we have marked off here the Fed pivots, basically when they decrease the interest rates. You can see here, the chart below here, the blue one, is when they dropped the interest rates previously. And you can see how the stock market reacted on the chart above. So we can see that when they increased the interest rates since the 70s, we see a huge drop to the downside almost immediately after. You can see here in the 70s it dropped 36%, 48%, and during the 80s it dropped 27% when they decreased the interest rate. If we look more recently, we can see here during the 2008 crisis, they dropped the interest rates, and immediately after it consolidated for a couple of days, weeks, and then dropped straight down. Same happened in 2001. As soon as they decreased interest rates, it drops down. So historically, we can see when the Fed pivots and drops the interest rates, basically decreasing it, we can see a huge drop in the stock market. And when the stock market drops, Bitcoin will follow. That's how it's been since Bitcoin's existence, basically. So this is great information for us to know. We know that they will increase the interest rates to 5.25% approximately during the start of next year. And when they decrease it, we know historically that the stock market will drop to the downside. So that's great information for us to know. But how do we know the Fed's strategy and how have they done previously? Well, I have a chart. So this is basically the Federal Reserve pivot strategy. They have done so previously and they are gonna do it the same way this time as they've stated previously in the FOMC meetings. They do it in 3 steps, and we are currently witnessing the stage 1 of the Federal Reserve pivot strategy. And that's basically decreasing the rate hikes. So they've increased the rate hikes for about 75 basis points this year. And during the December FOMC meeting, they increased the interest rate hikes with 50 basis points instead of 75 as they done previously this year. So that is the stage 1 of the Fed pivot. They decreased the interest rate hikes. So instead of 75 basis points, they went to 50 basis points. And this is the stage 1 where we are at right now. And basically we're gonna stay in this zone probably until the next FOMC meeting when they will decrease it, or sorry, they will increase the rate hikes by 50 basis points or even maybe 25 basis points during the February and January meetings. So here's where we're gonna stay at least at the beginning of next year. Stage 2 then is when the Federal Reserve pauses its rate hikes. So basically they come out on the FOMC meetings and state that no, we're not gonna higher the interest rates basically. So when they get to 5.25% of the interest rate, they're gonna pause it most likely. That's how they done previously, and they are aiming to do that this time as well, as they stated in their last meeting. So when we get to 5.25 approximately, as the Federal Reserve's interest rates, they will most likely pause it. And the last and final step of the Fed pivot is the stage 3. And the stage 3 is what you saw on the chart I showed you when Fed pivots and how the stock market has reacted. That's stage 3, basically decreasing the interest rates. So when we get to 5% approximately, 5.25 as the Federal Reserve's target, they will start to decrease from that point and basically print money. And when they've done it historically, that's when the stock market has dropped almost immediately after. It takes a couple of weeks and then we see a huge drop. So when we get to stage 3, that is your alarm should go off when you see that the Fed pivots and starts to decrease the interest rates. That's when you should buy, in my opinion, because as soon as they do that, the stock market plunges to the downside and basically we find a bottom a couple of weeks and months later. And when we get there, I will notify you on this channel, so please subscribe to this channel to get notified basically of when the Fed pivots and when it's time to buy. But let's look at what Bitcoin might do when we get to stage 3 and the Fed pivots. Now I'm gonna summarize this video and the thoughts going into next year and how you probably should think about investing during next year. None of this is financial advice, it's all for entertainment and educational purposes only. With that being said, and the information we gathered on how the Fed will do with the interest rates going into next year and how the market reacts when they decrease the interest rates and pivots. So we know that the market doesn't like when the Fed pivots initially, but then after that we get amazing bull runs, and that's gonna happen this time. So we know that the Fed will increase its rates slowly, going to 5.25%, which is their target. And the next FOMC meeting is in January or February, I think. And they will probably increase it by 50 basis points so that we get to 4.75% interest rate. And the market's gonna react to that. Probably we're gonna consolidate going into January and February. And we possibly might hit 14K zone during the start of Q1, and we'll probably consolidate here. It will be a slow walk going into April, May, where I think we're gonna see the last interest rate hike and maybe a pause even. So the market's gonna slowly consolidate here in this zone, going like this. Maybe we get some spikes to the upside, some bullish news, and then down again. We're not going to see volatile movement on the weekly time frame, at least, in my opinion. And in June, we might see a pause again or something like that along those lines during the FOMC meeting in summer, basically. I don't think they're going to pivot yet if nothing unusual happens. But the second half of the year is when I think the Fed's gonna pivot because they can't move money out of the system for that long. They need economic activity and they need to print money in order for the system to go. And I think inflation is gonna slow down during this first half of the year, basically. Going into June, July, I think that it will be a slow walk to the downside. Maybe we get some spikes to the upside, some bullish news for crypto, but then it's gonna reverse back again as it has done previously. Here, for example, we had a quick pump to the upside here, and then we bam, down to the downside again. I think we could see something similar to that going into the first half of the year. And I think the Fed's gonna pivot probably by the middle or basically in autumn during next year. And that is when we're gonna see a huge drop to the downside. We're gonna see a big red candle going to the downside. And if you watched yesterday's video, you have the targets set for you. We could go to 12k, we could go to 5k, we could go to 8k as well. Those are some of the targets when Fed pivots and we initiate the stage 3 of the Fed pivot. After that, we will have a crazy fall or autumn, basically, and we will see a huge drop. And when you see a candle looking something like this, this is the body, and you see a huge wick like this on the daily or weekly time frame, that will indicate a bottom for you. So look out for that during the second half of the year or middle of next year, because that is usually an indication of a bottom when we see a lot of buy orders, and the price will reverse from there by the second half of next year. We will then see. If you missed this opportunity, don't feel sorry, because this is where I will start DCA at least, because then we will see a walk to the upside. And as you know, the market makes structure, we usually form somewhat of a W. So you will get a new chance, because L1 will feel bullish here because we've dropped for almost a year and a half from the top of the bull run. And people are going to feel optimistic because we will probably go from 8k up to 10k, 12k, 14k, and then we'll go and drop again, basically to shake out the retail investors. And then going into next New Year's, we will see a pump to the upside, going and recovering some of the volume candles to the upside, and we could end next year higher than we are right now, going above this volume candle, going to 20k. That's something I'm looking at least. Oh, sorry, now it disappeared. We said 8k, up, and there. I think we will top out next year around 20k. And 2024 will be the start of the bull run. So I'm gonna play it like this at least. I'm waiting to DCA when Fed pivots. I'm gonna DCA like crazy in this area. I will DCA as much as I possibly can, buy all the coins we talk about on this channel, and do that until the end of next year, possibly even going into 2024. And that is where I'm gonna stop, and we are get the insane bull run of 2024 and 2025. We're gonna have the halving, Bitcoin halving at the start of 2024, and that will be the start of an amazing bull run. If you don't feel bullish now, it's okay. That's what the market maker want you to feel, because when the bull run starts, we will see prices above 100k is our prediction on this channel, and it's fully possible because the money has disappeared from all markets and it's gonna be pumped right back in. So happy New Year's and Merry Christmas to you all. Big Boss out.